This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. My guest today is Daniel Masters. Daniel is the executive chairman at Coinshares, a leading digital asset management firm. The Coinshares Group manages nearly 700 million of assets on behalf of a global investor base. Daniel has a long history in the financial markets, and he was once the global head of energy and trading at JP Morgan. Welcome to the show, Daniel.
Good evening. Delighted to be here, Andy.
How are you doing today?
Doing very well, thank you. It's been a very interesting few days in Bitcoin and in other currencies. Been following them actively. Lots of global macro events, Middle Eastern activity, some stuff specific to the crypto market with Bitcoin SV pump in the last few days. So it's been a good time and a busy time. That's
right. As we record, it's January 16 or January 15, depending on where you are in the world. And crypto markets have, they're roared into life to begin 2020.
They have indeed. And it's been interesting to note the behavior especially of the Bitcoin complex during this early stage of the year. You know, coming from the financial markets as I do, I'm used to this kind of disruption in the sort of geopolitical scene, and you know, my history in the oil markets makes me particularly sensitive to that kind of stuff. And what was really fascinating in the recent period was how Bitcoin really started to behave like a risk-off asset. And during the tense and difficult situation in Iran, we saw Bitcoin reacting very strongly as a risk-off asset and tracking gold very, very closely as the stock market in the US on the overnight session during the heat of the crisis was going down and Bitcoin and gold were going up. And I thought it was very interesting to see that, as well as the record levels of participation in what I call real money accounts, sort of on the CME platform in Chicago and New York, where clearly, you know, new records in volume, new records in open interest in the Bitcoin futures contract. I think that's very reflective of real money accounts, real investors participating in Bitcoin as a risk-off asset and as a proxy for gold. And it was fascinating to see that.
I completely agree, and I want to talk about all of this in a little bit more detail, Daniel, but I suppose really we should start at the beginning and just get a little bit of background on yourself. So, you know, tell me, how did you become the global head of energy and trading at JP Morgan? And this is a few years ago. Let's have some backstory.
Sure. I'm a science graduate. I studied physics and management science and statistics, and I began actually in the oil market. I used to work for Shell Oil in the back in the old days. But I then spent 13 years working for Salomon Brothers and latterly JP Morgan, always in the commodity space with a focus on energy, but also covering base metal complex, the precious metals complex, and some agricultural commodities too. And in 2000, I co-founded a company called Global Advisors, which is actually the parent of Coinshares to this day. So this company's been in continuous operation for the last 20 years now. The hedge fund we started on departing JP Morgan with Global Advisors ran for 13 years. And it ran through the commodity super cycle when oil and metals, gold, copper, really increased in value. Two things happened really. The Chinese became very important users of hard assets and commodities. That was something that had been predicted a few years earlier and came to pass as we started that business. So that was good for us. And also, you know, things like depletion of physical assets and the weakness in the dollar that was pervasive for a few of those years, that gave us great opportunities in the commodity space. So we ran that cycle. It came to an end. It completed its cycle and everything repriced by sort of 2011. And we were left looking for something new. And along came Bitcoin. And my first interaction with Bitcoin was very much from the lens of a commodities trader. One of the curious things about Bitcoin is how it has so many different incarnations. It can be a proxy for early stage tech venture capital. It could be a currency. It could be a commodity. It can be, you know, a number of things to a number of people. But to me, it was a commodity. I thought the story was very compelling. I was attracted to the technology and the sort of the beauty of Satoshi Nakamoto's great discovery. And I was also fascinated by the concept of a new form of money. And so in 2012, we pivoted our business entirely, and we've been in the digital asset space in various forms since then.
Yes, you have, and that was quite early when you put it like that. 2012 is reasonably early by any measure for people to first make their way into the Bitcoin ecosystem, particularly in the case of someone like yourself, Daniel. And you're not just sort of coming across Bitcoin or reading the white paper or starting to do a little bit of mining at home or mess around with the blockchain, but you've gone on pretty hard in terms of, you set up one of the first regulated Bitcoin investment funds. So what was it that gave you so much conviction even back then that you thought there was really something here and you were prepared to invest both financial capital and I suppose probably your personal reputation as well? So what gave you that level of conviction that early?
That's a great question, Andy. I'm not sure anyone's ever asked me that before. I'd done Bitcoin for pushing 2 years, so from 12 through 14, before I'd actually met a human being in the Bitcoin space. That's how rarefied that atmosphere was back then. And I attended a conference in Amsterdam run by the Bitcoin Foundation. And I was absolutely stunned at the scope and the scale of the event. I was expecting a few geeks in a coffee shop. What I found was 2,000 people who were deeply passionate about this new technology and this new movement. The companies that attended at the time were all very, very small. Brian Armstrong was there with a little table and some balloons and some flyers advertising his new Coinbase exchange. Blockchain.com were the heroes of the event. They'd received recently 25 million in venture capital, and it was an unheard of number back then, obviously very small by today's standards. So it was a very, very early stage. But what I was struck by was the passion and the intelligence of this group. And, having come from, a pretty intelligent bunch of people in the commodities and the investment banking space, I just thought this was a really fresh, interesting new avenue. I began to understand the tech and I began to think about money. I looked at the energy that these people had, and I was pretty much sold. Just as a final point on that early stage, at that conference, there was another chap there by the name of Dan Moorhead. And Dan, as I'm sure you know, is the founder and principal of Pantera. And Dan came from a similar background to me. He was working for Tiger, one of the big New York hedge funds. And Dan and I were the only two financial people in the room out of 2,000. And the movement was very much a technology-focused, geek-driven community at the time. Obviously, today it's very, very different. But that's how early we were to the scene. It was the dawn.
If you're prepared to tell a few stories from those days, Daniel, and I read Bitcoin Billionaires just over the summer holiday here in New Zealand, which of course tells the story of Tyler and Cameron, the Winklevi twins, and their introduction to Bitcoin. And of course, they met Charlie Shrem. They started buying up as much Bitcoin as they could. But of course, in these days, if we're talking, 2011, 2012, 2013, there was Mt. Gox and then a few other little exchanges. But it was quite difficult, I would imagine, to really move into the space with any size. So, what was happening from your end?
Yeah, well, my first transaction, which predated that conference I mentioned, I sent $10,000 of my own money to some agricultural bank in China with pretty little expectation in terms of ever getting anything back. It was a pure bet and a punt and a chance that I took. That bank, that Chinese bank, was the bank of Mt. Gox. And so I bought my Bitcoins on Mt. Gox, quite a few of them for my 10 grand back in the day. And then, I just started to play with it. And as I did, I got to understand, how to do some cold storage, how to do mining, as you pointed out. We did some of that for a while, how to move currency between wallets, read the blockchain and all this kind of stuff. So it was very much a sort of a tech experiment at the beginning. And, to bring all that together, I sort of thought about what we'd done in the commodities space. And we were early to that space too. And when we started our commodities fund back in 2000, there wasn't much in the way of institutional participation in the commodities space. And the way we went about that and the way we achieved, over $500 million in assets across 2 funds, we did 3 things. We explained the investment thesis to a community that didn't really understand it. We assembled a team of people who were expert, and we put together a financial investment vehicle that was fit for purpose. And that was our methodology early in the commodity space. And so we applied the same idea to Bitcoin. One of the things we felt we had to do very urgently was to remove a lot of the uncertainty. There's enough uncertainty about what the price of Bitcoin is going to do, but you didn't really want the uncertainty of pricing accuracy, of audit, of administration, of third-party custody, fiduciary responsibility. All the things that you take for granted in the traditional hedge fund space did not exist in the Bitcoin space. And so our calling card to the community, and this is everyone brought their own special talents, and ours was focused in what we did before. We started to put the thesis together about, why Bitcoin had value. We tried to assemble a team of people. We've got a very big team of 45 people now, but they were hard to find back in the day, but we did. And then we put together Gabby. Gabby was the world's first regulated Bitcoin investment vehicle, and it just brought that sense of credibility to the space, and it gave security to our investors when they were sort of taking the chance to invest in a really risky asset. At least they didn't have to worry about all the peripheral stuff. And when we got that regulatory license in 2014, it was pretty big news in the crypto space. And, not naturally developers, we're not naturally, wallet operators, but we did bring that financial maturity to the marketplace. And that early achievement through Gabby actually became the bedrock on which we built the entire business.
Very nice, and should just point out that Gabby, of course, stands for the Global Advisors Bitcoin Strategy. That was one of the world's first regulated Bitcoin investment funds. And well, I suppose that sort of just about brings us up to date, Daniel. So let's move on to Coinshares, Global Advisors and Gabby. This has all sort of evolved into Coinshares. Well, tell me what Coinshares is then, and what's the thesis behind Coinshares?
Coinshares is indeed the product of, the journey that we took and all the steps that we took along the way. And my colleague Ryan Radloff birthed the concept of Coinshares. And what Coinshares really was a branded, high-end, sort of high-touch investment manager, or even digital investment bank, if I was to be kind to ourselves in describing it that way. Over time, we started to build Coinshares. We started to move some of the assets from Global Advisors into Coinshares. Global Advisors these days is really nothing more than a holding company, and all our activity resides now within Coinshares, under the Coinshares umbrella, in a sort of a series of verticals. The way we've constructed Coinshares to go forward is we've got a very strong product suite that starts with our very famous trackers, Bitcoin tracker, Ethereum trackers, XRP and Litecoin, that we list on NASDAQ and Nordic Growth Market in Scandinavia. That's where the bulk of our assets reside. Those exchange traded products offer traditional investors who have even pensions, access to Bitcoin through their normal bank or broker without having to worry about dealing with, Bitcoin exchanges or custody or storage. We take care of all of that, and we offer these tracking certificates that very accurately track the price of these digital assets. We have a couple of funds, Coinshares 1, Coinshares 2, that are respectively a token fund and a venture fund. We have an indexation project combined with Imperial College London, which is a high-tech institution, actually my alma mater as a university. And we're bringing an institutional grade commodity index to the marketplace. That's very much in line with what we saw in commodities with the Goldman Sachs Commodity Index, just a heavily engineered, well documented, well thought out index. And we've also recently launched a DGLD, a really high quality gold token. Very interesting partners, a great go-to-market strategy, super technology. That's the beginning of our hard asset tokenization platform. So those are our products. We support those with a series of other verticals, including custody. We have a joint venture with Nomura, the Japanese bank, and Ledger, the French engineering company, to bring institutional custody. We have a very active trading business. We do about $2 billion a year in trading activity, largely revolves around hedging our own products and giving our clients access to the marketplace. And we provide advice, we provide research across a number of different platforms. And, summed together, that starts to look a little bit like a mini version of what JP Morgan does. Products, research, execution, custody, advice. That is the platform we currently operate.
Yes, and Daniel, you mentioned, you have the Bitcoin Tracker 1 and the Ethereum Tracker, and I think the XBT Provider was the first, that was the company there, and you guys acquired that. And Fran Striner, who I think Fran is the founder of Brave New Coin, probably an old colleague of yours or an old mate of yours at least, and Fran told me to ask you about a funny story where you're on a beach in Cyprus at the time you were trying to acquire XBT Provider. Does that ring any bells?
Well, indeed. XBT Provider, we did acquire. We acquired it from a Swedish company, the Bitcoin mining company that met some hard times and had to liquidate itself. And we bought XBT Provider, which is now a Coinshares company. And it's actually, we're rebranding that as Coinshares. But it's quite a strong brand on its own. We're trying to fold that now into Coinshares. And at the time, the MD of XBT Provider was a chap called Johan Wasserstrom. We were running Gabby, and he was running XBT Provider. We were both doing the same thing, essentially, bringing institutional investors into the Bitcoin space. And so, I was on vacation in Cyprus with my family, and I was sitting on my pool chair in my tennis shorts, and I had a call from Johan, and Johan said, XBT Provider has run off the rails, and our parent company's gone bankrupt, and we've been delisted from the exchange. Is there anything you can do? And I was very interested in acquiring the company. So I jumped on the next plane. Believe it or not, there was a plane direct from Cyprus to Stockholm, which was very lucky. I was on the plane that afternoon, and I arrived in Stockholm, checked into a hotel, and I had a meeting with the liquidator the next day. But I didn't have any clothing with me. All I had was sort of tennis gear and sneakers. And so I had to go into the middle of Stockholm early the next day, and I had to beat someone's door down because the stores don't actually open till 10 o'clock, and the meeting was at 10 o'clock. So I banged on someone's door who was vacuuming his store and bought a suit. And then I ran off to my meeting, and I made it by 10 o'clock. And that is funny. I think Fran is a good friend. I very much respect him and love what he's been doing, Brave New Coin and Techemy and his companies. And he certainly knows a few of my secrets, and that's one of them.
Excellent. And of course, I suppose one of the things about crypto nowadays is, you probably, expected to turn up to a meeting in a suit. But, in the same way that, Charlie Shrem is fairly famous for wearing beach shorts and jandals. And, here down under in New Zealand and Australia, you'd probably see a lot of crypto people in beach shorts and jandals right now as well. And I don't think anyone would really bat an eye, would they?
Well, I've come to understand that. I'm probably older than the average crypto participant, which has its pluses and has its minuses. But the fact was that in extracting that company from bankruptcy, we had to deal with the lawyers for the bankruptcy trustees. And more importantly, we had to deal with Swedish Financial Services Authority, the regulator in Sweden, and also NASDAQ, the marketplace, which is a very high-end and large organization. So it wasn't quite the venue for beach shorts, and it still isn't.
Excellent. What's the big idea then, Daniel? Look, let's change tack a bit. Is there a simple thesis for Coinshares as to, what you see happening or what you want to happen, say, in the decade ahead, the 2020s? We're just entering the second decade of Bitcoin, blockchain, and crypto. We've laid the foundations. What does your company and what do you as the leader expect to see take place over the next 10 years? How are you positioning?
That's a great question also. We see two worlds, the traditional legacy world of finance and investing, and we see the crypto ecosystem sort of side by side. And in many ways, there are people that exist entirely within the crypto ecosystem and do technology, and there are companies that exist entirely outside of it. But we bridge the two. We feel that, our contribution at this stage of the evolution is to make that bridge and to unify those two worlds and to allow the institutional investor, the retail investor, to access this marketplace without having to go, full metal jacket technology. Our long-term vision, my long-term vision for this industry would be a little bit deeper than that, though. I think at the highest level, you could look at this space and say, right, what do we have before? And what we had before was essentially, a hub and spoke financial system where you've got some very big banks, institutions, insurance companies, central banks that form a hub, and then everybody is individually connected to them. And that's where, you get the concept of too big to fail. You get the concept of strategically important financial institutions. You get the effects of Dodd-Frank legislation in the United States, and all the stuff that sort of became the consequence of the financial crisis and of the system that pre-existed. But I think the digital asset ecosystem will have an architecture fundamentally different. And the architecture of the digital asset system is going to be a network architecture where there is no hub. Everything is a network. There is no central point of failure or strategically important companies. We're not there yet. We're on the path, I think, to doing that. It's enabled by technology. It is possible to engineer and build that within, perfectly reasonable financial regulation. Financial regulation is very powerful, very complicated, but that also can be massively streamlined and, through technology. We can disseminate risks where, your counterparty may not be JP Morgan and 50,000 other people's counterparty may not be JP Morgan. 50,000 people may have 20,000 counterparties in their digital asset transaction, their stablecoin transaction, their hard asset tokenized transaction, their tokenized equity transaction. And that indeed will dramatically reduce the systemic risks in the system. I think it lays a foundation for being able to codify a lot of the complex regulation and make it more streamlined and simple to deal with. And I think it opens new vectors of operation that currently don't exist. In the same way as, we didn't understand Facebook and Instagram and Uber and Airbnb before they existed, because the concepts which were completely new couldn't exist until there was a platform on which they could be seeded on. And once that platform existed, which was the internet, we had all these dramatically new technologies. They were better technologies than we had before, but they also did things in a way that could never be done before. And I think the concept of digital assets across the internet will indeed not just clean up, streamline, and reduce the risks from the initial ecosystem we come from, but it will also open up new ideas and new ways of doing things that we don't even really contemplate yet. So that's a 10-year forward horizon, but I think that's the direction of travel currently.
Yeah, I think you're right, Daniel. It's, if you put that another way, in the same way that the internet disrupted a lot of companies, but it didn't really kill companies. It just enabled new types of businesses to grow and made existing ones a little bit more agile and efficient, and perhaps leveled the playing field. And Bitcoin and open financial systems have the potential and the ability to do the same thing. Then it's not necessarily going to kill financial institutions, but it just enables the nimble ones to adapt, evolve, and grow and become more resilient. And really just it's about opening up new rails, new opportunities, and bringing everyone online and across the same playing field.
Yeah, I mean, that's absolutely right. And, we'll see that as we go forward. We see companies like Fidelity that are really embracing this new evolution, and they have over 100 people in their digital asset space now, and that's a great example of a company that I think is going to benefit tremendously from their early adoption of this kind of technology. You've got even JP Morgan active with their own ideas and their own kind of take on how to exploit these new opportunities. You still have a lot of other companies that are extremely dismissive, and I think that's a big mistake on their part. And then you have the entirely new companies, companies like Coinbase, blockchain.com, Binance. I mean, these are all very, very powerful and interesting companies now, and they don't have peers or parallels in the legacy system at all. So, yeah, we're going to have a different mix, some renovated old companies and some entirely new ones.
Excellent. Well, let's take a very quick break, Daniel, and then when we come back, I want to talk about digital gold, D-Gold, escape velocity, and more. Back in a second.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
Okay, Daniel, I mentioned digital gold, and you mentioned it right at the beginning of the show. So you've gone some way down the path already. You're tokenizing gold. Is that how you describe it? You're digitizing gold. So what is D-Gold?
Right. Well, let's back up a little to Bitcoin. Right now, Bitcoin is the ultimate digital bearer asset. It has value, and it exists entirely in an extracted form and in a non-material form. Gold is the ultimate physical bearer asset, and gold has a 5,000-year history of being a stable source of value and, to a certain extent, a unit of account and a medium of exchange. It doesn't lend itself well to other money characteristics, but it has formed this sort of baseline of stability and even been the basis of currencies of a fiat description in many, many instances. So, start with those two as sort of on opposite ends of a spectrum. Now, what we've seen over time is gold has become increasingly more digital as the world has become more digital. And so the progression, which happened slowly at first and more rapidly in the last few years, we've seen gold develop into a gold forward market, and then a gold futures market, and then a gold options on futures market. Then you had ETFs, ETFs backed by gold swaps, ETFs backed by gold physical, and then indeed options on those gold ETFs as well. Gold has become, more and more digital through that evolution that it itself has had. But what's interesting is as it has become more digital, it has become ever more reliant on the legacy system, because when you buy a call option on a gold ETF, and you buy it because you want to hedge, and you want to hedge against some financial calamity, another financial crisis, a banking failure, a currency failure. If you're expressing that in the form of, let's say, a call option on a gold ETF, well, think about all the people in the middle. You've got a gold option market, a gold option market maker, an option pricing agent, an option clearinghouse, and then you've got the underlying ETF on which the option is based, which will have another series of special purpose vehicles, custodians, security trustees, brokers, exchanges, and so on. And, you can easily come up with a dozen intermediaries that are going to form some part of the path between you and your physical gold. And so ironically, what you can then surmise is that if indeed there is a financial calamity, well, are all of those links and all of those intermediaries going to stand up? And my assertion would be probably not. And so the idea behind digitized gold is, can you create a legally robust, regulatory resistant token that doesn't represent sort of shares and doesn't represent ownership of a special purpose vehicle or some other pooled investment, but actually represents the ownership of the gold itself? Because if you do that, then you circumnavigate all of those intermediaries. And that is what we have done in DGLD. DGLD can be found on our website, dgld.ch. The sponsor is a subsidiary company of ours, joint venture company with some other partners. What we sought to do was create that digital ownership, physically redeemable, so that if the calamity comes and if you've bought gold tokens as a hedge, then you can back your truck up to our vault in Switzerland, present your tokens and your private keys, transmit them back to what is essentially a vault, and then you can get your gold. And that, I think, is a very, very compelling idea. And we the construction of doing that was very complex. It involved a regulatory prescription, some technology, and a very ingenious go-to-market plan. It required some great partners. And we have put all that together, and we are currently live and trading. And we're very, very proud of this product, and we think it has a great future.
Well, the most interesting thing to me about this product, Daniel, is the way I understand it is, you've created a digital gold token, or it's a token, but it represents real gold. But as I understand it, you've built it on the Bitcoin blockchain. So you've got the characteristics of physical gold, as well as the security, divisibility, and portability of the Bitcoin network, and yet it's separate from Bitcoin, which is true digital gold. Have I got this right?
I think that's a perfectly accurate way of describing it. I mean, if you want to summarize it, we think it's the world's most enduring asset on the world's most secure blockchain.
Nice.
It does a number of things, but what it also, one of the things it does, it answers one of the questions which I repeatedly have heard from skeptical investors in Bitcoin. And they say to me, well, what use is this stuff? What fundamental value does it have? Why do we need it? Put aside, the value of Bitcoin as a currency, and it has a value as a currency. And you look at the way we're using it. We are using the Bitcoin network as an architecture and as rails on which to transport these digital tokens which represent physical ownership of gold. And so it is a very strong use case for the Bitcoin network. And it's probably one of the first ones. I'm not aware of any other assets, certainly not of the size that we currently have. We've now tokenized $50 million of gold. I think that is probably certainly the largest gold token of any kind. And it's probably also the most significant asset that is currently railed across the Bitcoin network.
Very nice. All right, Daniel, well, let's switch gears again. I want to finish off with, of course, the very famous Crypto Conversation hot take round. But before we get there, I think I'd like to maybe just get some quick perspectives from you on the macro situation, the regulation situation, the institutional situation, and perhaps even, the stable coins, the Libras, and the central bank digital currencies. That's some big topics here, but let's just try and move through them really quickly. You did talk about it just at the beginning, but what's your quick summary of what you think is happening macro economy-wise? Look, take it away.
On a macro basis, one thing is clear to me. There's too much money in the system. We have not figured out how to unwind the enormous central bank balance sheets that currently exist. The quantitative easing scheme has inflated all kinds of non-monetary assets because money's going down in price, so everything else goes up. That's the macro scene. We have low inflation currently, but we have record high employment in many areas of the world. It is not going to be long before we see inflation pick up. Now, if you go forward in that configuration, with a world awash in money, and which means low rates, because interest rates are the price of money, too much money, low rates, and you get some inflation. Well, what that means is you have very negative real interest rates. And when you have negative real interest rates, people look for hard assets to get out of the declining value of their paper money. And the two assets I think they're becoming most interested in are gold and Bitcoin. So that, I think, is the macro situation, just deflationary kind of feel to the marketplace, we're awash with money, but with a specter of some inflation, which drives real rates lower and it supports Bitcoin and gold.
I suppose the real macro intrigue this year in terms of the context of Bitcoin, of course, is the Bitcoin halving, which most people have been expecting that to take place around May. But my understanding is that with the record highs that we're hitting in the Bitcoin hash rate and difficulty at the moment, that might take place even before May. And, you just get the sense that with the quite bullish Bitcoin price action that we've seen in the start of this week. What's your take on the halving narrative and what do you expect to see there? Of course, Plan B's stock to flow model, that is a part of this as well. Yeah, your thoughts?
Yeah, well, it's going to be an interesting event, I believe, that's for sure. As a commodities trader, I'm usually trying to buy the rumor and sell the fact. So I think the price action comes ahead of the event, as it usually does.
Yes.
I wrote an article 4 years ago now because it was just before the last halving. It's actually still on my LinkedIn page if your listeners want to dig through it. And what I talked about in that article, because I was very confused, the Bitcoin market wasn't reacting to the impending halving back then in the last halving. And I wrote this article in it, and by luck or judgment, the reaction came shortly afterwards. But the commodity markets, they're interesting things, and I understand them pretty well from my previous, experiences. If you take the example of oil, there are billions of barrels of oil in the world, and then there are 80 million barrels a day of daily production, and then occasionally that supply is reduced, by an event like the missile attack in Saudi Arabia the other week. And it's amazing, right? So you see the missile attack in Saudi Arabia, you see 4 million barrels a day of oil disappear. That's 5% of the world's production. But 4 million barrels a day compared to billions of barrels in storage and in reserves is not a very big number. And the reason the market for oil reacted so violently was because commodities do not price in terms of, how much have we lost in terms of the total inventory. They price and they reprice in terms of how much have we lost of the free float, the readily available new production. And that is where Bitcoin has a parallel. So, we are going to move forward into May, and we're going to see the Bitcoin reward halving down to 6.25 Bitcoins per block. We're going to go from $13 million, $14 million a day of total dollar value of mining rewards down to half that much. And the supply, is going to be more scarce. So that alone, I think, is going to be a tailwind for the Bitcoin price as we approach the halving date in May. But recently, as I sort of mentioned earlier, the fact that macro real money investors now can view Bitcoin as a powerful risk-off asset, something that performs like gold, but more aggressively, i.e., if you need $1 million gold hedge, you only need a $100,000 Bitcoin hedge. It's a very efficient macro hedge. And I think that what we may see if we combine, if we go into a scenario where we see more geopolitical risk, that's a strong likelihood. If we see some correction in the stock market, that's a likelihood given the bull run we've had. If we see some turmoil around, politics in the US and China, that's another, quite likely event as we approach the election. Then those macro risks, if they drive real money investors to Bitcoin, they're going to find that the short-term liquid supply is now halved. And so I can see a scenario, it's not certainly going to play out, but where the combination of an increased risk environment plus a lower Bitcoin free float supply on a daily basis because of the halving, and a new perception that Bitcoin is a great macro hedge, that's a very interesting recipe as far as I'm concerned.
It's a very interesting recipe indeed. And look, I want to point out for the listeners here at Brave New Coin, we're working on a nice, I suppose you'd call it a dashboard that is all about the Bitcoin halving, all the data and analytics, and we're probably hoping to get that live on bravenewcoin.com in the next week or so. And when we do, I think I'll probably do a podcast episode that is all about the halving and really dig into some of the different arguments and the different nuances, because as you say, there's a lot to it, and there's the miners on one side, there's the institutions, and there's the traders, and everyone is trying to outthink each other and hedge against their own risks. So look, it's interesting times, but I mentioned regulations and the institutions, and even things like the central bank digital currency. There's just so much going on at the moment, and it's really just the first year of the decade, but there's a lot going on, Daniel.
Yeah, well, regulation is an interesting one. Look, we've seen Bitcoin and cryptocurrencies now rise to the attention of the world's most influential people in finance. Been readily talked about by President of the United States, President of the European Central Bank, directly the board of governors of the Federal Reserve, the Office of the Control of the Currency, HMRC in the UK. I mean, it's at the top table. And, it's met with some skepticism, and it's met with, some positive sentiment as well. But the fact it's being discussed, I think, is very positive. The regulatory environment around the world is very fractured. To just jump around a few jurisdictions in the United States, there's a very complex regulatory environment, but there is a willingness to work with digital assets and cryptocurrencies, so long as they do not violate some of the basic principles of investing in the United States when it comes to protecting investors and anti-money laundering and insider trading and all the things that we try and avoid. So it's complex, but they're working through it. In Switzerland, we have an incredibly proactive regulatory environment. And Switzerland is leading the world right now. That's why we founded our gold token issuance company in Switzerland. The most advanced crypto regulatory environment, the best understanding, the most support from the government, the most support from the banking system. In the UK, there is a reluctance. There's actually a negative sentiment about Bitcoin as an asset at the regulator, which I think sets the UK back. And we've been very public in some of our comments with the Financial Conduct Authority in respect of their recent paper, where they are negative on Bitcoin, and we've pushed back in the public domain along those lines, and in the light of the fact that the FCA could easily be seen as out of line with other regulators in the way that they're going. Up in Sweden, where we issue our Bitcoin notes, we see a very positive approach, a very entrepreneurial approach. The Scandinavian countries are very enthusiastic about cryptocurrencies and digital assets, and the regulators and the exchanges there, that's why we're domiciled in Sweden, are very, very enthusiastic about the prospect. And so you've got a really different sort of collage of views at different regulators around the world. We're coalescing around being sensible about money laundering, but in doing that, we have to be very careful not to stifle technology. And that's the formula that Switzerland's achieved very well. And I think a lot of other regulators would do well to look at their model.
Very nicely said, Daniel. And finally, just before we go to another break, are you still in contact with the JP Morgan crew?
In certain ways, yes.
And look, just have to ask, obviously, Jamie Dimon quite famously said some fairly ridiculous things about Bitcoin. What's your take on his comments there?
Look, I mean, Jamie is not a good witness to that, to the developments in the crypto space. JP Morgan is the world's most significant financial institution. They have built a wall of regulation around themselves. They've paid billions of dollars in fines. They've raised the bar by which, it's very difficult to become a large financial institution because of all the regulations and because of the risks of fines and issues that you'll have as a result. But this works for them. It's an incredibly powerful company because it's very difficult for other companies to make an impact inside that moat that they've created and all these complex regulations. So clearly, it doesn't work for Jamie if other financial companies can run technology in a different way and do what he does, quicker, faster, and in a more efficient way. And so it's not surprising that particular turkey isn't voting for Christmas. And I think the comments that he's made over time are wrong. They've been proved wrong in many cases, and I think they're very outdated.
I think you're exactly right, and you're right to point out that he's obviously just going to protect his own best interests, and that's the same in the case of someone like Warren Buffett or any of those legacy traditional figures who need to protect their interests. Let's put it like that. All right, well, let's go to another quick break, Daniel, and then we'll come back and we'll quickly finish off with the Crypto Conversation Hot Take Round.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
Daniel, I like to finish each Crypto Conversation podcast with a rapid-fire round of Crypto Conversation hot takes. Are you up for it?
I'm totally up for it. Let's go.
All right. Daniel Masters from Coinshares. I just want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Bitcoin's proved itself as the daddy of crypto assets. It is always going to exist. It is going to grow stronger. There will be competitors and peers, but Bitcoin will always lead the way, and we'll end up with half a dozen, 2 dozen similar networks that do slightly different things, but Bitcoin will always take the lead.
Yes, indeed. I think I agree. Daniel, what is your firmest conviction crypto opinion?
My firmest conviction is that one day Satoshi Nakamoto will receive the Nobel Prize for providing the internet with the one thing the internet forgot to do, and that was the option not to copy and paste.
That is a great answer. I like that a lot. Okay, keep it moving. Daniel, I ask every guest this question, put you on the spot. Who wins the American presidential election 2020? That's this year. Who wins?
The Donald. It's a shoo-in.
Could be. A lot of people think that, but sometimes a lot of people are wrong. We'll see. Daniel, Bill Gates famously said, we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does the blockchain space look like in 10 years' time?
Well, what a great question. I consider myself very fortunate because we have our feelers in multiple countries, in multiple different parts of the crypto ecosystem, from venture to passive products, active products, custody, trading, mining. So this is an incredibly complex canopy. And I'm very fortunate that, with the great people we have in our organization around the world and the information flow we have, I just have a great perspective of what's going on. And no one's written a handbook on crypto. Very difficult to know what's real and what's not, and what's good and what's not. And so I feel fortunate to be in that situation. And I have to tell you that even from the position I sit, I spend a lot of time doing this. I do nothing else, and I do it 7 days a week. I have to wrap my head continually around, these new developments and where we're going. As I said before, the direction of travel is a network-based financial services industry. And I think we're going to see many more assets that trade and are transported and are owned through digital form and railed across various crypto networks.
Well, on that point about crypto networks, have we reached escape velocity, Daniel?
Well, escape velocity, a favorite epithet of mine. I used it a couple of years ago when I started talking about whether the digital asset universe was going to exist alone or whether the digital asset universe was going to combine with the legacy infrastructure. And there was a moment in time when I really did believe that we were going to reach an escape velocity. We were going to get out of the gravitational pull of the legacy system. But I think, some of the excesses around the ICO craze in particular, they crossed lines, they were unreasonable. Even I thought they were unreasonable. The way forward now is probably not an escape velocity in terms of, the Bitcoin ecosystem, the crypto ecosystem existing entirely in isolation. It's clear to me now that it is going to be a new way of doing things, but it is going to be a relative of the old system and not something completely new.
Very nicely said. All right, Daniel, William Gibson said, the future is here, it's just not evenly distributed. Can you think of an example of the future being here right now, but most people just aren't really aware of it?
I was with a friend who's not in the crypto industry yesterday, and we were looking at a virtual reality implementation. It's actually a golf game, and I must say, I got the feeling as I was experimenting with this VR technology that I was being really transported to another place. That is a very weird feeling. I've also seen Anish Kapoor's, art installation, which is done in VR as well. It's an incredibly spooky experience, and it sort of speaks to that Matrix-like existence where the human body is some vestigial piece of blubber, in a tube, being fed by wires and being stimulated by electronics. And scary as it might seem, it does feel that we're moving in that direction.
It really does, and that relates really quite nicely to my very last question. And Daniel, that is, finally, what is your favourite science fiction book, film, show, or universe?
Well, that's a pretty easy one. I'm 56 years old now, and so while Star Wars was actually, a part of my adolescence and early adulthood, I would say, my childhood was populated by Star Trek and Captain Kirk. those early, grainy, poorly featured movies about man moving through the solar system, which was definitely the precursor to things like Star Wars. That's my favorite show.
Excellent. Thank you, Daniel. Well, some of my favorite guests here on the Crypto Conversation, they have also gone for Star Trek, and well, that's no surprise, really. Thank you so much for talking to me today. The microphone is yours. Take us out. Tell the listeners where they can find you on your various platforms, where they can find Coinshares, anything you want to say. The microphone is yours. Take it away.
Well, thanks, Andy. And first of all, let me just give a shout out to Fran and to Grace. They're great friends. They've done wonderful things. They hosted us very, very generously when we were visiting New Zealand last year. So well done to all that team. You can find us coinshares.co.uk, dgld.ch, xbtprovider.com, coinshares.co. Take your pick.
Excellent. And look, for the listeners, I'll put links to all of those in the show notes, of course. All right. Well, hey, thank you, Daniel. All the best for 2020 and beyond. And look, I'm sure we'll talk again. All the best, mate.
Same to you, Andy. Thank you.
And we are done. Okay. Thank you, Daniel. Links to Coinshares and some of the other platforms that Daniel mentioned are in the show notes. Thank you for listening to the Crypto Conversation. We've had some really big episodes lately. We had 2 really big episodes in December. Sergey from Chainlink and Andreas M. Antonopoulos. Both of those episodes were easily our most downloaded and listened to episodes yet here on the Crypto Conversation. So yeah, that was great to see. We've got lots more big, exciting and cool episodes in the pipeline. Hoping to talk to Samson Mao from Blockstream next week. That is booked in. Going to do that episode on the halving that I talked about in this podcast, and lots more coming up as well. So if you want to make sure you know when each of these new episodes drop, please do make sure you subscribe to the Crypto Conversation in whatever podcast app you are using. And look, would really appreciate it also if you could give us a 5-star rating in Apple Podcasts, iTunes, even leave us a review if you're that way inclined. But for now, for today, we are out of here. So see you real soon. Keep it locked. This was the Crypto Conversation for Brave New Coin.